Sam, it's great to see you.
Likewise.
I wanted to talk to you about a couple things today, but first of all, to congratulate you and also note that Arweave has surpassed 20 billion transactions. And on top of that, when you talk about like the data stored, petabytes of data.
Petabytes, but yes.
Petabytes. Thank you. Thank you. That's the reason why you're the brains behind the operation. Why? What is driving this growth?
Well, I mean, Arweave is permanent information storage in a decentralized form, but there's no real other way that you can purchase that service. And it's useful for many, many different things. And I think that's one of the things we've been most excited about over the last couple of years is seeing that the use cases went from, I would say in the early period of Arweave, probably 2018 to 2020, something like that. It was mostly people storing web pages for archival purposes. And then there was this wave of NFTs that people were storing on the system. So if you want a digital collectible, well, you really don't want the data to disappear. If you're trading it, it's very sensible. And good use of the system. And that drowned out more or less everything else for a while. But in the period after that, people started to use the network to store all sorts of things. I think the first one we identified after that was systems like Kive, which are storing chain data from other networks. And you might wonder why that is necessary, but it turns out that most blockchains, and the more scalable they get, the bigger this problem becomes. They don't have a incentive mechanism which rewards replication of the ledger. So if you run an Ethereum node and you have it in archive mode, which basically creates many more outputs, it's much larger, which is also what you would want if you're trying to query, hey, who interacted with this process, what smart contract in Ethereum land, what effect did it have? That data set ends up being enormous. It's so large that the Ethereum Foundation was actually sending people physical hard drives containing these things for a while. And so, Kive built a solution where you can basically store chain data inside Arweave and then have it be openly addressable and accessible. And they're doing this now for, I think, 15 or 20 networks. So that was one of the early ones that we saw of diversification of use cases, I would say. And then after that, there's obviously Redstone stores a huge amount of data on the network, many, many small records containing price information. And they have this really elegant system whereby they call it bring your own data. So at the peak of the 2021 wave, approximately something like $200,000 was being spent by the main Oracle services per day in Ethereum transaction fees, because they had no choice but to provide all the data all the time, regardless of whether people were actually using it. And so Redstone built this really elegant system where they store the data on Arweave, and then they allow users to bring the data into their transactions on Ethereum or on other networks in order to use it. And so they have a sort of sell-by date, basically says, okay, here's a piece of data, we upload it to Arweave, it's signed with the right keys, so you can tell it's from Redstone. And then you can pull that data into Ethereum and validate it and use it, but you don't have to push the data into Ethereum. And so you're using Arweave as this open data lake that anyone can address and anyone can audit. And then you're settling on these other chains. So that was another one that saw a lot of usage over time. And then, of course, there was AO, which is now at, I think, 2.5 billion. Might be wrong about that. It might be more now. Yeah, 2.5 billion at minimum transactions already. And so I think the exciting thing is that now the network is just growing of its own accord with network effects. It's pretty well known amongst the developers in crypto that this is the way that you can store on-chain data at scale. And it's just like the default go-to solution, the sort of top-of-mind solution to that problem, which occurs all the time in many different domains. And so we see people picking up and using the network for all sorts of things that we're just not even aware of anymore until like we notice bumps in the chart. Like, what was that? And then we have to go find out. So it's truly a decentralized ecosystem, and it's growing of its own steam. And obviously, we're putting a lot of time and attention into AO, which is growing it in some decent chunk. But it's not only that; it's many, many other things as well.
Incredible. From your perspective, from your vantage point, where do you see this growth going? Do you see onwards and upwards? I mean, do you see other opportunities coming down the pipe that you hope Arweave is able to glom onto? I'm kind of curious where you see Arweave going from here.
Yeah, well, okay. One thing is for sure. charts are never up and to the right permanently. That much is obvious. So I don't know, if there's another market cycle, I would expect the usage will also increase further. And then after the cycle, it will drop for a while. We saw that after 21. But I think long term, the direction is pretty clear. And there's something that I'm really interested in that actually you are a pioneer of, whether intentional or not, which is that, okay, so Arweave is a giant open data lake. And the way that the world is moving is that the cost of developing applications is diminishing rapidly, to the point where, for those in the audience,
Even someone like me can try.
yeah, like one day I was leaving my office here and I bumped into Drew, and he was telling me, oh, I've been building, call it Droogle, right?
Google, baby.
Yeah, Drew is building casually his own Google on top of Arweave, which was something that, you don't have like a coding background. It's never been part of your life before this.
No.
Yeah. It was completely unthinkable just a few years ago. And yeah, when we sort of started having these ideas in the late GPT-2 era. And then when we saw GPT-3, it was very obvious that, okay, the way the world is moving is that the experiences that people will have on the web, the cost of production of unique or novel experiences should drop to virtually zero. And I think that's what we're seeing now. You can store the application front ends on Arweave, or in theory, we call this the data OS. You should be able to just generate them on the fly, perfectly customized to that one user and the experience that they really want. Yeah, in like a single unified experience that can have many, many different forms underneath. And we see that starting to take shape, and Arweave is perfectly positioned. I mean, it is an open data layer. So when the applications become almost transient, or not quite irrelevant, but just extremely thin and trivial to rebuild, let's say, then what really matters is the content that is hosted inside that. And I think that people will still want content either created or curated by humans, most likely, at least for a long time. Yeah, and we've been building this vision of the Permaweb for many years at this point. It's perfectly set up to do that. It has a single combined data lake where you can access content from all different types of applications without silos around them and build on top of that content. And so, and you can even store the user interfaces, and all of the infrastructure comes with the platform, if you will. Yeah, it's perfectly positioned to be the data substrate of that new web that I think is pretty rapidly coming into view. In fact, sometimes talking to people about this, there's so much that we've been so embedded and engrossed in the Permaweb world for so long that is obvious to us and fits perfectly with this model, but people on the outside don't immediately see. Like this idea that you have an open index. It's like everything is sharing a single database, if you will. That's just natural to us. That's how the world should work, and it's how our world has worked for a while. But on the outside, they're still struggling for that. If you tried to build this vision that I just sort of tried to lay out a little bit on the centralized web, well, the first problem you'd have is, okay, new project, empty database, kind of sucks. And new project, takes 15 minutes to build with Claude Code, but now I have to go run infrastructure, and that's a pain in the ass, and no one wants to do it, and it's expensive. And it really just gets in the way of what the model is pushing towards, which is this sort of transient, or the word that comes to mind is kind of frivolous nature of applications, like, Droogle, sorry, Drew, but let's say hypothetically a Droogle 2 that wasn't as cool. Might be a frivolous type of experience that people have fun with for a day or a couple of weeks, and then it burns out, and they move on to something else. Well, what they want to have go with them is all the data and all the infrastructure. That just doesn't work on the centralized web. And I've talked about this for a while now, but I have one final.
Go, please.
Yeah, I think that interestingly, we've kind of seen part of this world play out in crypto much more so than in Web 2 already, in that, and one of the reasons we got started building AO in the first place is that we recognized that people were associating with what they called layer 1 chains. which is somewhat ironic because Arweave is definitely a layer one on its own. But the layer one chain, they believed, subconsciously, I think, is where their identity is, right? So you got the wallet has your inventory of things, and then you go on work. Vitalik had this analogy about networks being something akin to massively multiplayer online games. I think he was kind of onto something there. Yeah, it's like you've got your character, if you will, which is your MetaMask wallet or your Wonder wallet, and you have an inventory of things inside that, and they have some value, and you kind of carry them between different experiences, right? And then there's one DeFi project that's fun for 10 minutes. It's almost like a quest, that pops up in the world. Yeah, user-generated content world, if you will. And then people move on to the next one, right? And so I think there's already some grounding of this in crypto. The thing that the consumers, the mass market, are going to care about is not just finance, but also content-based applications, UGC applications. And this is where Odyssey comes into the picture. But yeah, anyway, that's a bunch of thoughts about that.
It's incredibly fascinating. I would like to note that I've been called worse than frivolous, so no worries there. I've got a question about economics, and I'm reading from my notepad because I've got the numbers written down here. I'm sure you're going to correct me. So right now, Arweave is costing about 25 cents to $1 per terabyte month. Is that give or take?
It's about 75-ish cents per terabyte month, yeah.
Okay. Now,
But that's the amount paid to miners, to be clear.
to miners.
Yeah.
Traditional cloud providers, we're talking $23 a month.
That's about right, yeah.
Okay. So again, I'm not a math guy, but that's 20 to 100 times more efficient.
25, 30, yeah.
How?
It's very simple. And it's also super interesting. And I don't think people have, even we, having worked in what I guess you could call decentralized physical infrastructure networks for many years, we hadn't quite grasped just the scale of this efficiency effect until it was 2023 or 24. Okay, so we've been building Arweave for a long time, and the core team, we have some nodes that we run just like to be able to monitor what does our software do, but when it is in production, like this is normal part of the process. But what we hadn't done was run a petabyte scale cluster. And during that time period, we had a bunch of miners that were running at these sizes, and the bugs and problems they were coming across, the sort of like small edge cases with performance, that type of thing, we were not seeing because we just didn't have enough data. And so we thought, okay, well, yeah, now is probably the sensible time to go build our own small mine. No, never want to be a large part of the hash rate in the network, but we weren't at risk of doing that. We just wanted to make sure that we could see the errors and the things that our users were seeing so that we could help fix them. Mm-hmm. That started this process of, okay, so we tried to find, how do we run one of these things? And it should be that the miners are able to make money from it. So it should be achievable to at least make it break even, right? Well, our first port of call was, okay, so if we go to AWS and we try and run the nodes there, what's it going to cost us? The answer was it was astronomically non-profitable. There's no way we would compete that way. Okay, fine. So we try and find the cheapest cloud providers we could. And in the sort of Web 2 space, you're looking at about $4 to $6 per terabyte month. Actually, I think $6 in like publicly accessible. Go to a website, you can sign up and you can get that price, about $6 per terabyte month, which is really, it's very, very expensive. We were going to lose like 90% of the money if we did it that way. So that wasn't going to work. And then we ended up having multiple bidders trying to get the contract, and we just about got it down to, I either won't say the name of the provider or won't say the price. It was around in the range of $1.50 or so. But that was really a stretch for them to be able to get it. And we only got that price because there were multiple parties that were bidding against one another to get this contract. Yeah, and then it became very, very clear. I mean, the miners are able to provide a service in a trustless way, right? So we don't have to know anything about their mining operations other than the math of the proofs that they're producing in order to use their service. And that means they can hyper optimize the storage arrays that they have, or use storage that they already had and weren't making use of, which is something that we've seen quite a lot of recently. It's very hard then to compete with that price, but they can sell that to the network. And well, why is it then that AWS, is selling it at such a high price and people are buying it still? It's trust and distribution. Those are the two things. Trust, it turns out, has this immense cost on the provision of almost any service, but we never really think about it because it's just, how and why would I buy a service without trusting the person that is giving it to me? Like, it's subconscious in our society that that's the normal way of doing things. But with the math of these systems, it doesn't have to be that way. And the other thing is distribution. AWS, I think someone described it to me as no one ever got fired for buying IBM. It has that trust, but also the route to the enterprise customers. These are all the reasons I think that they're able to charge such exorbitant prices. And I think they're probably nowhere near as efficient at even providing the storage themselves underneath that. Like, I think their margins are actually likely much lower than that. It's just that they haven't had the market pressures that participants in a decentralized network like this encounter. And so, these things are unbelievably powerful market optimizers, you could say, because they remove trust from the equation completely, and distribution is sort of inherent in the network. And they have this great advantage, which is, it just costs like a 25th of what you would pay at Amazon. And this is in the general case, not even thinking about Arweave and the fact that you can't really buy permanent storage anywhere else as well. But it's just far, far, far cheaper. Because people can just plug in and provide the service, and you can essentially sell that service by proxy of the network to anyone in the world that is interested in it. You get these network effects of distribution in the same way that the packaging or bundling effect helps Amazon. You go to Amazon for servers and you end up buying also S3 on the side. You get that same network effect of, okay, Arweave is the place to permanently store data. And so, people come back to it, they share the links, it grows like that. They tell each other about it. All of those traditional network effects. And then on top of that, you just get ruthless price efficiency that in a way that really isn't possible in centralized markets. So I think this is super, super cool.
It is super cool. You don't think that. It is super cool. And speaking of the endowment, so as I understand it, right, Arweave has been deflationary for about a year. How you just pay once for 200 years of storage, and that effectively creates a token burn, so to speak?
This is my favorite part of the mechanism, and virtually no one understands it. I think this is it's cooler than we even designed it to be, and we worked very hard to make sure it was a good design. Okay, so the way it works is like this. You pay for 200 years worth of storage at the present price on the day that you put the data into the network.
Yeah.
As the cost of storage declines over time, the storage lifetime or runway, or the amount of storage purchasing power you have decreases by the amount of time that has elapsed, obviously, but also increases at the rate that the storage cost decreases. So imagine we start 1 year, we got $1 worth of storage purchasing power, which I know gets us, or we got 78 cents. So we got 1 terabyte storage per month.
Mm-hmm.
At the end of that same year, if the cost of storage has declined, say 10%, well, yes, we've burnt some of the capital that we had available, but at the same time, when we assess the situation again, we have more storage purchasing power, far more storage purchasing power. And so the network is configured to be very conservative in estimations of future storage cost declines. Basically, all else being equal, and token prices, as we are all aware, are not static. But so there's a very large safety margin for that. But all else being equal, if the cost of storage declined at a rate of 0.5% per year on average, then the storage lifetime at the end of the year would be the same as it was at the beginning. The token prices are variable, and subsequently you have a big buffer there. The actual decline in cost of storage has been about 38% on average for approximately 50, 60 years at this point. It's really, yeah, the incentive for humans to encode data more efficiently turns out to be extraordinarily high. But the bit that I think is elegant about the model and that people don't quite grok yet is that, okay, with a network like this, you want the token to accrue value proportionate to usage. Makes sense, right? Well, in the first wave of deep-in networks, and to some extent this is still true of most of the compute networks as well, they have this, you use the token, you give the token directly to a miner who can then sell the token immediately. So if there's 100 tokens in the system, the amount of tokens that are active in the supply at any one time is expected to be about 100. But what you really want is a token time sink. You want the tokens to be in someone's hands for a longer period of time. Then there are fewer tokens on the market that are attempting to take part in the same number of economic transactions. And there's this thing called the equation of exchange that basically tells us how that will affect the price of the token. Basic point is that it accrues the value proportionate to the usage. But because Arweave is focused on extremely long-term storage, I really don't like the word forever personally, because it's, well, the heat death of the universe will definitely come sometime after Arweave is no longer producing blocks. But yeah, I know that's why I'm not so good at marketing. I get it. But it is focused on the maximum possible time period, and that is into the hundreds and hundreds of years zone. And so it needs to take out enough tokens from the supply on day one when you put the data into the network to cover that time period. And it's also very interesting because it's a risk model. So if you were to try to compete with Arweave on the price of storage by saying, yeah, we'll just cut the endowment contribution in half, well, what you've done there is just double the risk. Mm-hmm. And so from the user's perspective, there is no value extraction here. Like, they are paying directly and only, small asterisk there, but we get to it, but really a small, virtually only the endowment contribution. Like, there is, okay, we get to the asterisk. The asterisk is, they also pay a very, very small fee to have the data actually synced to the network, which is given to the miner, the time that they write the transaction. But it really is a small fraction, I think. After there's some cut sort of deadline at a block height somewhere relatively soon. Currently, it's about 10%, goes down to about 4%, if I'm not mistaken. So it's a tiny fraction goes to the miner directly, immediately. But the vast majority of it is just put into the endowment, which is subject to this risk model, which is outside anyone's control or knowledge. None of us know how storage prices will evolve over time. And so if they contributed less, they would just be increasing the risk for their data, which they don't want. Yeah, and it takes out those tokens out of circulation in what is essentially a burn. Because we've done a lot of modeling on this, you can actually find it on RWiki if you're interested, and run the simulations yourself so you get a sense for how this works. But in the vast majority of cases, if the cost of storage declines in the future at some reasonable rate, you end up burning most of those tokens. They never actually leave the endowment again. And all of this happens, so it powerfully accrues value to the token itself, while not extracting value from the users, which makes it impossible to compete with. Like, the only way you could try and compete with it is just increasing risk, which is decreasing the quality of the product, which is really radically different than the Web 2 world, where, try and take some margin from the users at all times, and this pits the users against the provider, essentially permanently. It's a completely different system. And I think that's just super cool. It makes permanent storage available for the minimum viable price to the maximum number of people. And at the same time, it powerfully accrues value to the token. It's kind of amazing that it worked out that nicely.
It did work out nicely. It's like our holders are joining in on a bet with us about the price of compute over time. It's like we're all in this together. Yes or no?
And the price of compute, but
storage.
Yeah, I guess you could think of it that way. Okay, so if the price of storage never declined again and the token price was perfectly static, then what would happen is over 200 years, it would emit all the tokens back into the supply again. So we're not even betting on the declining cost of storage. Like, I can't think of another token model that takes tokens out of circulation for longer than a few years at maximum, let alone 200. So it's, yeah, you don't even need to be thinking about, well, how will the cost of storage decline? That said, if the cost of storage does decline, which any reasonable expectation, I think, would be in line with, then yes, those tokens just never make it out of the endowment again. And so, yeah, and the answer is kind of yes, and also we don't even need that.
Awesome, man. And I'll try to work in the heat death of the universe into our marketing.
Thank you.
But yeah, there you go. True or false? We're becoming the default permanent storage layer for Web3.
We'll become because I
Are.
think we are.
Are becoming, yeah.
Yeah, no, so Arweave is interesting because, well, maybe it's our suboptimal marketing, but the developers love it. And if you speak to crypto developers that have actually used any storage related protocol, I'm pretty sure they will say that their favorite is Arweave. Those that have tried to use others, well, we speak to them all the time when they come and use Arweave. Yeah, it's the way to do on-chain storage at scale. There just really isn't any other solution.
And without, you don't have to name anyone, but like when you look at other decentralized storage solutions out there, what stands out to you as why do developers say, oh, thank God for Arweave when they come to us? Like what do other models miss that ours contains?
But it actually works.
Oh, that's important. Yeah.
No, you'd be surprised that is a lot of people that we speak to, they come to Arweave initially just because, well, they can actually upload data and it's relatively simple to do so, and it works. Turns out that stands for a lot in this industry. But I think that an additional sort of side of this is that all of the other storage systems, they focused on competing with traditional Web 2 data storage provision, temporary storage. There's always this phase with a new technology where people try and build skeuomorphic solutions. Right? They try to mirror the existing world in the new paradigm.
Thank you for defining skeuomorphic. You saw my look.
Yeah. It's like when Apple used to, in the early iPhones, everything had like I'm looking at a table here, the pattern of a table.
Yeah, like you click on the table and there your files are on there.
Yeah, exactly. They try and like map everything in the new world onto the old world, which largely, often, and in this case definitely, misses the point of what the new world is offering, which here is, you could run Arweave's mechanism as a centralized company, but no one would be able to trust it. Like it is blockchain native in that the monetary policy and the policy for the storage of data and the provisioning of it is something that is transparent, neutral, and open and immutable. Doesn't change over time, simply is. And I think that really appeals to the developers who are trying to build something because, well, the smart contracts they're making are also, sure, I quite call them permanent, but pretty damn close. They want them to run for a very, very long period of time. So they don't want to be thinking about, well, I stored some of the data, but now, now the data's gone because the contract's elapsed. It just fits naturally with the things that people are trying to build.
So Arweave has, in a sense, a new component, but in the sense of the Permaweb has grown to the Permaweb Index. And as we know, 1/3 Arweave, 1/3 AO, 1/3 Fair Launch projects. That's something new that has been launched this year. Why did you structure it this way? Like, talk me through your thinking when the idea first came to you and thought, okay, this is what I want. 1/3 for the index and R, 1/3 AO, 1/3 Fair Launch projects. I think people would be interested to hear like what your thought process was and what you're hoping to get out of it.
Yeah, so I think that the ecosystem had expanded to such a point that there were many different assets that are associated with the different protocols, that are different layers of the stack we're building. And as a consequence, I got the question too often to ignore. Which token do I buy? It's understandable. Not everyone has all day to, research this stuff and be on X. I also amongst that category now, I'm afraid. Um, Busy building. But yeah, people are busy. And so why not provide them something that gives generalized exposure to everything in the ecosystem and at the same time provide founders with a way of getting funding that is truly provably neutral? I really didn't like the process that, founders would come to us and they would petition for capital for something rather. And I was always trying to tie it back to, okay, well, go get some traction and adoption, like see what people think of it in the community. And then we try and use that as a barometer of what we should fund or not fund. But here, far better, it's just transparent and neutral, like with nothing to do with it at all. Now people can come along and they can say, hey, if you have Arweave tokens or other bridged assets to AO, you can delegate to us and you can earn ownership of that project. And so now every Arweave holder has that, if you will, sort of governance right built in. They can, and it's not like coercive governance. It's not 51% voted in favor of something. And so, now we're doing it or now we're not doing it in a binary form. It's that each individual person gets to make their own decision. And the net effect of those individual decisions is the funding that goes to that project. Yeah. And on the other side, well, now we just have a unit and a medium of exchange for the ecosystem, which is Pi. You can just back basically whatever type of transaction you're attempting to have with someone with the value of the ecosystem itself at large rather than just one of the networks inside it. And so, yeah, that's kind of how we landed on this design.
It's Pi. What should people think about when they're thinking, should I hold Pi? Should I directly hold R? Should I directly hold AO? What is the difference in the usage for those tokens in your mind?
Yeah, well, so, okay, two different questions there, I guess. What should they hold? I think it depends on how much time they have available or how much conviction one way or another, right? Like if you want generalized exposure to the whole ecosystem and you don't have enough time to be like on top of every single new development every day, Pi is a very sensible default choice. So there's that side of it. And I think that, people will appreciate that over time, that they will realize they have participated in some new exciting thing that they were completely unaware of. But because other people were aware of it, Pi has bought into it, basically the same way, and they delegated to Pi. So now they have some exposure to the change in value of it. So I think that it's really useful from that point of view. But if you have really specific opinions about, well, okay, I really like this project or that project, and I can, I like some of the base networks like AO or R, great, you can hold those in a more concentrated form, and then also individually delegate to the fair launches that you see as, having potential or that you would like to support one way or another. Yeah, then you can take an active role. But this allows you a sort of passive backstop, if you will, that also has this sort of neat downstream effect of providing founders with a very transparent and neutral way to get funding that is not based on any committee or advocating in some private forum or some BS like this. You just go and you tell people why it's cool and they delegate to it, and that is the end of it.
I actually want to dive deeper into that because I can tell your passion here. So autonomous agents managing Permaweb Index. Why was that important to you? Like why I can sense from experience you're talking here, maybe when you were building Arweave in the first place. Why was that important to get such a sort of like a neutral playing ground for delegations versus, a traditional system, VCs, index management, whatever you have?
Well, this system doesn't preclude any of those other options. But as I see it, the reason that I quit my PhD in the first place to build decentralized technologies was because I wanted to live in a world where you could get transparent and trust minimized or trustless services in cyberspace. And that goes to all types of services. It's not just web applications is obviously something we've been very focused on. And even below that, just archiving data for long periods of time, it's inherent that you must have trustlessness in that in order for it to work. But the same is also true of financial systems. Like this was what DeFi did in the first wave to the sort of primitives of the game. You don't have to trust Uniswap in the way that you have to trust NASDAQ to be executing your trades correctly. That is the fundamental, if you boil it all down, like why should we care about crypto? I think the answer is because it allows us to build trust minimized services at scale in a way that just wasn't possible before. And yeah, that can also apply to not just the economic games themselves at the base layers, if you will, or base layers like networks like Arweave, for example, or AO, but also the sort of base primitives of the games. Like, you come in, you have one token, I have another token. The game allows us to swap these in some form. And that can be made trustless. But on top of that, there's also the decision-making that makes things happen in the markets. And I don't see any reason, and now we've kind of proved it out, that doesn't have to be trusted either. And if you think about, like, okay, what is the scale of that opportunity? Well, 78% of the trades on NASDAQ happen at the hands of bots, not humans. And I think that will only increase over time. And we can make it so that instead of having to delegate your capital, the same deal as any of these other trustless services, instead of having to trust a single third party whom you don't know, you have no real oversight of or control over, to execute something for you. In this case, a financial strategy. You can read the code. It's in front of you. It is transparent and plain, and you know that no one else can change it. It's just immutably going to execute what it's like what it says on the tin. It is the tin. The tin is open. It's glass. And this allows us essentially to provide services to people that are useful in a whole bunch of different ways now. The sort of management side of finance that you could never really do before. And previously, this wasn't really tried on Ethereum and friends because it just wasn't scalable enough for it.
Where do you hope it goes? Like we're talking now, a couple of years from now, Permaweb Index, AOR, what would you hope it evolves to, if anything in particular?
Two things, I think. And one has already happened. The other is still waiting to occur. One is to be the NASDAQ, if you will, the launch platform for anyone that's excited about a Permaweb project that they can build to come along and just get it funded out the box. That has already happened. You see a bunch of projects now taking part. Many of the sort of well-known names in the Permaweb ecosystem already have pools that are running, and it's providing real funding and making real things happen in the ecosystem that would not have otherwise happened. And at the same time, people that hold Pi are gaining exposure to that. So yeah, we're already there at that point. And I think that will just grow to basically encompass more and more exciting projects. And we'll get more and more active participation with people saying, okay, I like the default set, but with 10% of the capital or whatever, I want to go and delegate to this specific project because I saw their posts about it and I've read the papers and I've looked at the code and it looks good. And so more manual participation, and from projects, they have a very strong incentive here. And you asked, what do we get out of this? And to be clear, like, we own no more Pi tokens, then we have no advantage in the minting mechanism. It's transparent and we have no upside from it in that financial sense. But what we do see as well, this provides a great incentive for people to go tell people about Arweave and AO and the Permaweb ecosystem in order to get them to delegate. And so I think over time, we'll see that play out more and more. And just a final one on that front, it provides really elegant incentives to keep everyone aligned. There are many, many projects in the ecosystem, and they get Pi tokens, like the people that are funding them and Pi itself, but they also get AO tokens. And so they become aligned with the networks, and something that, in retrospect, with Arweave, I wish we could have somehow done differently. I mean, it wasn't nearly obvious at the time either A, what the problem was, or B, how to solve it. But now we've kind of seen those things play out. I wish more of the builders could have owned more of the network. And here we have exactly the mechanism for that. And so that's really exciting as well.
Super cool to see you take those lessons and apply them as the Permaweb grows.
Yeah, we try to learn from, experience.
So Pi tokens are now tradable. Soon they will be redeemable. What does that mean?
Well, so you can essentially take along a Pi token and get the equal components of the underlying assets. That's more or less it.
Okay, that was an easy one.
Yeah.
Um, what should people understand before they jump into Pi? Is there anything that you wish that you could make sure people was loud and clear before anyone started to use the Permaweb Index? Any sort of misconceptions you might have seen? Any sort of beginner mistakes? Anything at all that you would want people to know before they said, "Okay, Permaweb Index, I'm coming for you."
Yeah. Um, Two things come to mind. They're not major misconceptions, I don't think, but they are worth understanding. One on the project side. So before we made the AO token mint, and to be clear, the Pi mechanism essentially allows people to build the same funding system that AO has inside AO downstream and replicate it. And a lot of thought and attention went into, sort of rigor went into working out, well, how should that mechanism work? The whole idea is that you should be able to passively earn ownership of the protocol while you use it. And at the moment we have pre-bridges, but the direction of travel and where we'll get to is that just when you bridge assets into AO to begin with, full stop, then you passively earn on those assets. It's the closest we could make to, I think it's the closest thing, uncollected yield, you could say, is the closest thing to free money that actually exists and is real and concrete. Which is basically, if you have dollars in your bank account right now, or DAI in your wallet, and this was the one we studied particularly carefully, if you have DAI in your wallet, or even ETH, that you're not using, well, you have uncollected yield, right? There is money that you could be claiming, but you're not. And so the mechanism allows us to basically say, okay, well, you could just bridge that, and then we could pick up the yield that is not being collected. And the rate for DAI, at least when we started, was around 35%, something like this, was collecting the yield that was available, but a big chunk was not. We can use that for funding the building of the system in the first place and incentivizing all the builders that create the thing. And at the same time, give people ownership of the protocol in this start from zero, completely fair, neutral access to the token. Entirely transparent, just like Bitcoin. That was the objective, and Pi lets projects that are building inside the ecosystem take that same approach and also get funding. And it just speaks to the values that got us all into crypto in the first place, I think. So that's one side of it. There's also this this question of, okay, what type of curve should a project use? And at first glance, and we had this initial thought too, and we've also seen that other projects had the same kind of instinct, let's say, that you want to have a curve that gives out more tokens at the beginning. But it turns out that that's not the optimum strategy at all. And this is how we ended up back kind of where we started, or what the impetus for developing the mechanism in the first place with the Bitcoin curve. We thought for a while, okay, maybe it should be faster at the beginning. But actually, if it is slower, you get this really elegant effect, which is that the inflation rate in the economy is low. It very quickly gets down to 16% or something like this after, if I remember correctly, 2.5 years of the mint, which compared to the crazy unlock schedules where a third of the supply will suddenly become active one day and it wasn't the day before. It's very low and very manageable for the token economy. And at the same time, that also provides this sort of benchmark for the projects themselves. If they meet or exceed I believe it's somewhere between 16 and 18% growth rate, and they use the Bitcoin half-life, the 4-year halving cycle. If all else is equal, like we said, token prices are never equal one day to any. They're a pretty good random number generator in some sense. But if you factor that out for a second, which is sort of volatility that can't be controlled in the system, then if you can meet a growth rate of 18% per year, then the budget for building out the ecosystem and the whatever project it is that people are building on top of it does not decline year to year. And 18% is like, for an extremely established organization like Microsoft, something like this, that's a pretty high bar to meet. But for an early stage startup, you can meet that and exceed it, like, by a very long way for a very large number of years. And that increases and grows the budget. So even as fewer and fewer tokens are being emitted, there's still enough tokens left that the capital that is generated by it, if you grow the value of the underlying system by some reasonable amount, it just continues to grow. So you want a slow curve. And I think the 4-year halving cycle of Bitcoin is a great one to go for. That was one of the questions we've seen a lot from project founders. On the user side, I think the only thing to be aware of that isn't super well understood is the mint rate for Pi is 10 to 1 AO. And the reason we designed it this way was, I didn't get to this before, but one of the things that we're really excited about people using Pi for is a medium of exchange. And AO is deliberately built to be very scarce. There's 21 million tokens ever, no more. It's a really tightly controlled supply, and making no claims or promises about value, that number could, in theory, get extremely high per token. And then if you're buying something with it, it's like, okay, it's a 0.00001 pi would be kind of annoying. And it's no more than slightly annoying, right? You can call it micro pies or something. Like people in the Bitcoin ecosystem talk about Satoshis. I think that's fine. So we just rebased it so that it's 1 AO from the mint goes into generating pi, and you get 10 pi out of it, so that it's just slightly wider denomination, so that you don't have to divide everything quite so much when you want to use it as a medium of exchange between people. But other than that, I think it's all pretty well understood.
And if people want more information, ao.arweave.net
or ao.gateway.io or any other REO gateway works just the same.
Perfect. Last question for you. If there was one thing someone watching out there would take away from this conversation about Arweave, about the Permaweb Index, about anything related to the Permaweb, what would that be?
Well, I think the audience, if they made it this far, they can probably tell us. We covered a pretty wide range of things.
Okay. All right. Sam, it's a pleasure, man. Thanks so much for your time.
Yeah, it was fun. Thanks.
Okay.